Hi guys. So today we will talk about defense stocks, and there has been a lot of news. We have been talking on this channel about BEL and HAL for last 1 month. So today we will do a very detailed view on top stocks like HAL, BEL. Also, we will look at the US defense market. One thing is very clear that there is a lot of news. If you look at the news from last 2 weeks on CNBC, NDTV Profit, Business Standard, all these newspapers have been writing a lot about defense stocks. We have been talking on this channel about defense stocks maybe 2 months back. We have been consistently invested in BEL since price of about 270, and it has been going up and it has touched 370. Now the problem is that it is becoming a little bit too hot a sector for short term. So if you look at the news from May 9th, I've collected all the news which is coming. So the more the news, lesser the chance of making short term or intermediate term money. Less news is what you should look for. Everybody is talking about defense stocks. Just look at business today, NDTV Profit, Money Control. Money Control says the rise we have seen so far is only a relief rally. He's saying only relief rally. HAL can deliver aircraft in large numbers. India to establish vendor relationships. This is from Elara Capital. Defense stocks were trading in green following product launches, MOUs, blah, blah, blah. On CNBC, Defense Ministry will reportedly meet on Tuesday to discuss various proposals to upgrade the defense fleet. Shares of Idea Forge, blah, blah, blah. So the point is, and I'm not reading out all of them, the point you get is that there is a lot of news. A lot of people are confused whether they should enter the defense stocks now or not. And I would say from a short term perspective, they should not enter now, but wait. I'll tell you why. But before that, let's look at the US defense index for last 20 years, how it has performed. See, defense is a sector which does not give exceptional returns. In US, if you look at the Dow Jones US Defense Index, this is a monthly chart starting in 2009. 2005. So 20 years, right? So 2005 to 2025. Now look at the starting point. The starting point was 100 and now it is at 700 in 20 years, which is a CAGR of 10.41%. That is not exceptional. So defense stocks by its nature cannot deliver 20-30% return. They are only going to give you 10-12% return CAGR. However, there could be short periods of time when the defense stocks move up very rapidly and they also fall quite rapidly. So the best time to invest is when they're down 40 to 50%. Or look at the US Defense Index 2008 and 9 when the big financial crisis happened. The defense index went down from 158 to 76. So that was the time to invest. The next one came, you could have also invested in 2012 at 97. The next one came in 2018, big drop. 2020, again a big drop from 554 to 328. Then 2022, another big drop. So whenever you see a big drop, even the last one, the high was 775. Usually you look for a 40% drawdown before you buy into an index. So this one you would want to buy around 500. It has gone up after it hit 600 recently. So all what I'm trying to say is that defense in general as a sector does not give you exceptional returns. That is something which we need to be very aware of. It does give you, if you look at the US, 10 to 12% return at max. Now you would say India is a growth market and blah, blah, blah. But US for defense is the biggest market because they attack everybody. They have wars in 50 countries all the time. So despite that, the US market has not given more than 10-12% return. Now look at some of the So some people give an argument that you need to pick the right sector, right stock, blah, blah. Within defense, there are stocks which run very fast and some which do not. I picked a sensational, or let's say a high-tech stock, which is Kratos. Look at Kratos 2001 till 2025. It is not even at its 2001 level. Look at the stock, how it has moved from 2001. Extreme left. It was what, 400, 500, and then it kept on going down, down, down. 2016, the stock came to $3. And now from 2016, it has regained, it has hit 35. Right? So the point which I'm trying to make is that even if the company is great, I mean, Kratos, if you read, they are amazing. But the point is, they might be amazing, but their stock price has not been amazing. So a good company and a good stock can be two different things. They do a lot of stuff in technology and defense and stuff. So all I'm trying to say is that you can have stocks in defense, especially the small ones in India, Paras, Data Patterns, etc., which will lose 50, 60, 70% of their value if the market is not conducive. The big ones which I have been focusing on are three stocks, which is HAL, BEL, and we have made a lot of money. I mean, I've been talking about it for last 2 months. You just need to go back and check my videos. HAL and BEL have done exceptionally well. Now, is it the time to invest new money? I would say no. And why do I say that? Let's have a quick look. First, at the long-term trends in HAL. So this is the HAL monthly chart since whatever, last 7-8 years. It starts from 490. Let's assume you bought at 490 in October 2018. Then you lost 50% of your capital because it went to 250, 200 also. By March, April 2020, after pandemic, this stock went down from 500, 490 to 200. Okay. Then the stock went up. Even if I take the original 490 price, last year the stock was around 5618, which is about 11 times. So it gave you a return of 1000%. If you had invested $1 or 1 rupee, it became 11 rupees. After that, it went down 49%. So it went down to 3046. Last year, there was a huge crash in defense stocks. So it went down 50%. Now it has regained 51. Yesterday, it was around 5200 also. So let's assume it hits 5500, 5600 in next few weeks. But I would say that you will get this kind of opportunity where the stock falls 20, 30, 40%. That is the time to invest. If you invested in HAL around 3000, 3500, that would have made sense. But at this point, I would say don't invest. Anything above 4000 for HAL for long term may not make sense. I'm just showing you the chart. There are also other logics based on the price to earnings, the order book, and so on, which is a little bit more complicated. But just looking at the chart, technically, they go up a lot and they come down a lot. You want to invest when there is a lot of fear in the market. Right now, there is a lot of greed in the market. So that is why you don't want to invest. And how do we know the greed? Because you can look at the TV news. We looked at all the news items and it all point to a lot of greed in the market, at least in the short term. So I would say that if you are invested or if you are planning to invest, you need to be very careful in the short term. Let's look at HAL chart. The way so this is the daily chart. This is not the monthly chart. And this is how it moved back from 3046 to 5100. It just did that in 2 months, March, April, May. Now, I have been explaining this in my previous videos. This is what I use: R2, R1, P, S1, S2. This is based on a proprietary model. You want to buy below S1. S1 is 3980, let's say 4000. That is where you want to buy HL. P, R1 is first resistance. First resistance, you want to sell some part of it, and the second resistance, you want to sell everything. So now the stock has achieved its R2. Now, HAL is something which you get considered to sell for short term. For long term, yes, it's a different story. But for short term, I think it is around the level where we should sell. Next week, my plan is to more or less clear up my defense portfolio. I will sell most of the stocks. Another one, which is data patterns, we'll look at it. I can also show you BEL, but let's just look at data pattern, how it moved. So it went to 2700 last year, and then it was cut into half, 50% down, from 2700 to about 1300, 1351 to be precise. Now from 1350, it went 2 times. It has gone 2 times. So it has recovered the 50% drawdown. It has hit R1. Its R2 is 3400. This stock is a smaller stock, and I would say that this is also, from a short term perspective, around the area where you should sell it. You can buy it if there is a fall, it falls to, let's say, 2200 or something, then you can look at it. But right now, all these stocks are very bubbly. They are all in the momentum strategies, and also there is a lot of news, positive news, and a lot of short covering happened. So when the mood is very greedy, you want to exit. So next week, I think we should exit defense stocks. Yes, you may be able to make 10%, 20% more. I don't know. Nobody knows. But if you have made good money, I've been talking about BEL, HAL for last 2 months. If you look at my previous videos, and now I'm telling you that you should exit. I will exit it next week. Starting Monday, I'll slowly start to reduce. I have 3 positions: HAL, BEL, data patterns, and also, sorry, solar industries. I have solar industries is another one which I want to sell. That is also with a lot of mutual funds. So all the 4 stocks are part of many mutual fund strategies. So that is also the good thing, that you always look at the mutual fund holdings. What does Kotak Mutual Fund hold? What does Motilal Mutual Fund hold? And so on. And then look for common stocks. So that will give you a little bit of confidence, because if Kotak is invested in data patterns, they might have looked at the fundamentals. So technically speaking, I think short term we are overstretched. Long term, I told you that in US, defense stocks do not make more than 10.5% CAGR over last 20 years. That is the data we saw. So do not expect that defense stocks can make your money double. They can make your money double like data patterns did. But why and how? When you buy it low. When you buy this data patterns below S1. S1 is 1687. So if you buy data patterns below 1700, then it makes sense. Otherwise, it does not. So this is a little bit about the defense stocks. I'll quickly recap. A lot of news. Number one, US stocks, look at the long term. They don't give more than 10.5%. The argument that they are high on technology and can grow, I have shown you Kratos Defense. It has not given very good returns for last 25 years. Then you have HAL. It went up 1000%. It went down 50%, which is huge. So you look at this second blue part. The second blue part is when it went down 50% from 5600. 23046. So 49% to be precise, it went down. So you want to grab that kind of opportunity. Short term HAL is very stretched. It is hitting the R2, which we use on all our videos. Nifty is around R1 right now. R1 in Nifty is 25 to 80. Then you have data patterns. Data patterns is a good stock, strong recovery from the P level pivot, and I don't expect it to move maybe 10 or 20% more, but the downside could be much greater. These stocks can fall 30-40% easily. So wait for that opportunity. If you're a long-term investor, if you're a short-term trader, you can do momentum. Momentum is that you buy high and sell higher. It's very difficult to do for common investors. Okay, guys. So this is a little bit about the defense stocks. I'll post it on Saturday, and then I'll try and do some kind of video on Monday, and also on Sunday. I'll do one video on the consumption stocks. Alright, guys. Have a good one and see you soon.